Welcome to Skytech-Lens. Porsche, a name that once meant power, quality, and German engineering, is now in crisis. For decades, Porsche stood as a symbol of precision and innovation, admired by car enthusiasts and respected by competitors worldwide. But today, the company faces a storm unlike any in its storied history. The company famous for the iconic 911 is facing its biggest challenge ever. The 911, once the dream car for generations, now represents a legacy under threat. On November 11, 2025, Porsche's future hangs in the balance as profits have plummeted by 99% in just a year. Investors and analysts are stunned by the speed and scale of the collapse. A staggering $1.1 billion loss in a single quarter has sent shockwaves through the industry. The numbers are not just bad, they're historic, and they threaten the very foundation of the company. Once busy assembly lines are now silent, and suppliers are left in limbo. The ripple effect is being felt across the entire supply chain, with thousands of jobs at risk. The world is asking, how did this happen to such a strong brand? Experts debate whether it was mismanagement, global economic shifts, or simply the end of an era. Weakness has made Porsche a target. Chinese investors are circling, hoping to buy a legendary brand at a bargain. The possibility of foreign ownership is no longer just a rumor, it's a real and present threat. For many Germans, the idea of Porsche being sold abroad is unthinkable, a loss of national pride. The brand is woven into the fabric of German identity, and its fate is deeply personal for millions. The threat grows as Porsche's finances worsen. Each day brings new headlines, and the pressure mounts on leadership to find a way out. Sales have crashed globally, down 26% in China, 16% in Germany. Showrooms that once bustled with eager buyers now stand empty, echoing the uncertainty of the times. The downturn is deep and widespread, touching every part of the business. From engineers to sales teams, no one is immune to the fallout. From Stuttgart's factories to showrooms worldwide, the crisis is real and immediate. The sense of urgency is palpable as the company scrambles to adapt. Porsche's collapse is more than a business story. It's a national shock. The news dominates headlines, and the public is left searching for answers. The brand that symbolized German success is now fighting for survival. Its future, once assured, is now clouded by doubt and fear. The world is watching to see if Porsche can recover, or if it will become a trophy for foreign investors. The outcome will echo far beyond the company itself. The stakes are high, not just for Porsche, but for Germany's industrial identity. What happens next could redefine the nation's place in the global automotive landscape. The company's fate could signal a turning point for the entire German car industry. If Porsche falls, it could trigger a domino effect across other legendary brands. As the crisis deepens, the future of Porsche and what it means to be made in Germany is at risk. The world waits to see if this German giant can rise again, or if an era of automotive excellence is coming to an end. Porsche's troubles mirror a wider German crisis. Germany, once Europe's economic powerhouse, is now in deep recession. Factories struggle, jobs are at risk, and uncertainty grips the nation. High energy costs driven by the war in Ukraine have quadrupled industrial bills. Germany's edge in affordable, high-quality manufacturing is gone. Companies can't produce as before, and industrial output has plummeted. For Porsche, costs are up while customers are spending less. Luxury cars are a hard sell in tough times. The combination of rising costs and falling demand is devastating. Porsche's falling profits are a symptom of Germany's broader economic pain. The crisis exposes vulnerabilities in the country's industrial model. As recession deepens, German icons like Porsche become targets for foreign investors. The government and public fear losing more than just a company, they fear losing a symbol of national strength. The fate of Porsche is now tied to the fate of Germany itself. As German carmakers falter, struggling to adapt to the rapid changes in the global auto industry, a new wave is sweeping across Europe. Chinese brands surge ahead in Europe, capturing the attention of both consumers and industry insiders alike. In just 2 years, Chinese electric vehicles have jumped from 2% to an astonishing 22% of the EU market, a meteoric rise that has left many traditional automakers scrambling. Streets in Berlin, Paris, and London now buzz with BYD, NIO, and XPeng cars, their presence impossible to ignore as they weave through historic avenues. Why? They're cheaper, packed with advanced tech, and appeal to modern buyers who crave innovation, sustainability, and value for money. Chinese EVs lead in software, battery efficiency, and digital features, setting new benchmarks for what drivers expect from their vehicles. Porsche's legacy was mechanical mastery, but the world now wants electric power and smart tech, qualities that are redefining what makes a car desirable. Chinese companies, built for this new era, are outpacing traditional European brands by embracing digital transformation and agile manufacturing. Porsche's Taycan, once a symbol of German innovation, now struggles to keep up with the speed and relentless innovation of its Chinese rivals. The rules of the car industry have changed, price and innovation now trump tradition, and the old guard is being forced to adapt or risk irrelevance. The rise of Chinese EVs is a direct threat to Porsche's future, challenging its dominance in a way never seen before. German engineering is no longer the gold standard. Digital prowess, software, innovation, and connectivity are now the keys to success. The pressure is on Porsche to reinvent itself, to innovate faster, think digitally, and redefine luxury, or risk being left behind in this new race. The Dragon has arrived, and it's rewriting Europe's automotive story, one electric mile at a time. The electric revolution has exposed a new vulnerability for Germany: raw materials. As the world races toward cleaner transportation, the demand for electric vehicles is skyrocketing, and with it, the need for critical minerals has never been higher. Electric car batteries need lithium, cobalt, and graphite, resources China dominates. These minerals are the lifeblood of modern batteries, and without them, the electric car industry simply cannot function. China controls not just mining but also refining and processing, giving it immense leverage. The country has built a vast network of facilities that turn raw minerals into battery-ready materials, making it the world's indispensable supplier. This is no accident, it's the result of years of strategic investment and planning. Chinese policymakers identified battery materials as a priority decades ago, pouring resources into securing global supply and building domestic expertise. China's grip on the battery supply chain is nearly unbreakable in the short term. From mining operations in Africa to refineries at home, China's reach extends across continents, making it the gatekeeper for battery production worldwide. Porsche's electric Taycan relies on Chinese suppliers for over 80% of its battery components. Even the most advanced German engineering is dependent on Chinese raw materials and parts. If China restricts exports, German production could grind to a halt. Factories would stand idle, workers would be left waiting, and the entire industry could face severe disruption. Beijing has already tightened export rules, using its power as a bargaining chip. These restrictions send shockwaves through global markets, reminding everyone who holds the keys to the supply chain. Germany's car industry can't transition to electric without China's materials. The path to a greener future is blocked by a single gatekeeper, leaving German automakers with few alternatives. This dependency is a strategic nightmare for Porsche and its peers. It threatens not just profits, but the very future of Germany's automotive leadership. China can dictate prices, availability, and even technology. With so much power concentrated in one country, the balance of the global auto industry is shifting. German companies are forced to rely on their biggest rival. Every deal, every handshake is a reminder of this uneasy partnership. The imbalance puts Porsche at a massive disadvantage in the global race. Competing with rivals who have better access to materials is an uphill battle. China's control of the supply chain is a central reason for Porsche's crisis. Until Germany finds new sources or builds its own capacity, this dependency will continue to shape the future of its car industry. Porsche is more than a car company. It's a German icon. The brand stands for engineering excellence, national pride, and economic strength. Its cars are woven into Germany's cultural identity and global reputation. Porsche supports thousands of skilled jobs and entire communities. A foreign sale would threaten these jobs and the legacy of Made in Germany. For many, losing Porsche would be losing a piece of the nation's soul. The crisis is a matter of national importance, debated from parliament to local cafes. The fear is that foreign owners won't respect Porsche's heritage. Saving Porsche is about protecting Germany's identity and future. Berlin sees Porsche's crisis as a national emergency. High-level meetings in the Bundestag focus on keeping Porsche German. Options include state investment or even partial nationalization to block foreign takeovers. The government is ready to act, but there's fierce debate over the cost to taxpayers. Some argue a bailout is unsustainable. Others say losing Porsche would be worse. The threat is real. Chinese investors are preparing formal offers. Germany is using its laws to investigate and potentially block any sale. The government rejected a Chinese partnership in 2023, but the pressure is mounting. The fight for Porsche is about more than business. It's about sovereignty. The outcome will set a precedent for how Germany defends its industrial icons. The world is watching Berlin's next move. Porsche's crisis is a tale of two strategies. Germany perfected combustion engines, dominating luxury cars for decades, but as the world shifts to electric, those skills are less relevant. China, meanwhile, invested early in batteries, software, and supply chains. Now, Chinese companies lead in the technologies that matter most. German factories and expertise are becoming burdens, not assets. China's long-term bet is paying off. Europe's industrial dominance is fading. Chinese state media now claim Europe must accept a new reality. China leads, Germany follows. Porsche's struggle is the most visible sign of this historic power shift. The old order is ending, and a new era is beginning. Porsche faces tough decisions at a crossroads. Cutting production and jobs could save money but damage its image. Selling assets might provide cash, but weakens the company long-term. A partnership with an Asian investor could bring technology and funds, but risks foreign control. Each option carries major risks. There's no easy fix. The company is trapped between its proud past and an uncertain future. If Porsche hesitates, a Chinese takeover becomes more likely. The choices made now will decide not just Porsche's fate, but the future of German engineering. The world is watching to see if Porsche can adapt or if it will become a casualty of global change. The next few months are critical. Porsche's legacy, and Germany's, hang in the balance. Porsche's crisis signals a turning point for Europe's car industry. The rise of Chinese EVs has permanently shifted the global balance of power. If Porsche falls, it's a clear sign Europe is losing its industrial leadership. European brands must adapt or risk irrelevance. The future may require more collaboration, state support, and new strategies. The era of pure free market competition is ending. This crisis could be a wake-up call, forcing faster innovation and transformation. The challenge from China is immense, but it's also an opportunity for renewal. The story of Porsche is just the first chapter in Europe's new automotive era. The road ahead will define what Made in Europe means for generations to come. Thanks for watching. Subscribe the channel for more updates.